Hi, I'm Karen Terry from McGrath Team BT and welcome to our November property market review. Well, as we approach the end of 2022, the Sydney housing market has continued to remain undersupplied as homeowners sit tight waiting for stability in the housing market. The RBA increasing interest rates to combat a 20-year high inflation and other economic headwinds are still creating a lot of uncertainty in the market. On the 1st of November, the RBA lifted interest rates again for the 7th consecutive time by another 25 basis points to 2.85%, which is now the highest cash rate level since April 2013. With the increasing interest rates, we will probably continue to see easing in property prices as borrowers have access to less money from their lender. We've seen many buyers over the past 2 months expressing urgency to buy before they're reassessed by their bank and inevitably lose a substantial amount of borrowing power, which is far more significant than the rate of decline in the market. For example, the same client with the same circumstances today as what they had in May. In May, they could borrow $1 million and now can borrow $750,000. If you could borrow $2 million in May, that same borrower can only borrow $1.5 million. And if you could borrow $3 million in May, you can now only borrow $2,250,000. Look, it's unlikely that we'll see a rush of new homes come to market in November, with only 4 weeks left to effectively run a campaign and sell prior to Christmas. Auction clearance rates are great indicators on how the market's performing. Properties are selling and auction clearance rates have remained steady over the past 8 weeks, hovering just under 50%. This data was sourced from SQM Research. Team BT are proud to be maintaining one of the highest team auction clearance rates for 2022, at approximately 88% for the year so far. Auction clearance rates and property data can be easily researched using SQM Research. We recently had the pleasure of selling 8 Epacris Avenue, Forestville prior to auction. We were on the market for 32 days and 122 groups inspected the property. Our guide was $2 million and the final selling price was $2,275,000. The attraction for buyers was the great location, level land and close proximity to city buses. Many vendors are now starting to take advantage of the softer market conditions to trade up, realising that in these conditions they can buy a larger home for less of a changeover cost than compared to last year. Look, in simple terms, their own properties have softened less in value as compared to the next higher price point, which means it costs less to make the trade up to the next property. Our team has already listed several properties that will be coming to market in January and February 2023. And whether you're refinancing, renovating, or considering selling, we're always available to provide up-to-date advice on current market conditions. Please feel free to contact me should you need any real estate advice.